Accounting Standard 1. The name of the standard: Disclosure of Accounting Policies. Mandatory. It has no exemptions. Accounting policy. What is the meaning of accounting policy? Accounting policy means specific accounting principles and methods followed in preparation of financial statement. Preparation and presentation of financial statements. That's all. We have total of 10 points in this whole accounting standard. We'll be covering it in just max 5 minutes. Example of accounting policies: it can be in respect to depreciation accounting, valuation of stock, debtor valuation, investment valuation, retirement benefits, borrowing cost policy, revaluation of fixed assets, impairment of fixed assets, exchange difference policy in respect to foreign exchange. All right, valuation can be in respect to debtors, inventory, fixed asset, then again inventory, which is in regard to shares, stocks, etc. And one inventory can be fixed goods, work in progress, and raw material. Treatment of contingent liabilities, goodwill, borrowing cost, forex, retirement benefits. These all are related to accounting policies. All right, we'll see all the significant accounting policies. Now we'll be discussing what is the meaning of significant accounting policy and how it should be disclosed. All significant accounting policies should be disclosed at one place. If any accounting policy has a material effect on financial statement in regard to income or expense, it is considered as significant. It concludes point number 4. Point number 5. I'll provide you all the notes through a PDF. Alright, don't worry about the notes, just concentrate on the material. If there is any change in accounting policy, then following should be disclosed: old policy, new policy, effect of change in policy, reason of change in policy. 4 things are required whenever accounting policy is changed: old policy, new policy, effect of change in policy, reason for change in policy. All right, when can we change the accounting policy? We'll discuss now. If effect of change cannot be ascertained, facts should be disclosed that we cannot ascertain the effect of policy. Now point number 7. Reason for change in policy. Following can be the reasons as per accounting standard 5. Better presentation, compliance with accounting standard, compliance with law. Point number 8. Following are fundamental accounting assumptions. We know 3 assumptions: going concern, consistency, accrual basis. Let's see. Going concern, it means business will continue for a foreseeable future. There is no necessity or intention to curtail the operations of entity. Again, next, consistency. It means all policies and principles are followed by entity will be consistently followed. Next, accrual. Assumption means income and expenses should be recorded as a period basis. Dates will be recognized even if amount has not been received or paid. Alright, there's nothing to be discussed about these policy. From day one as we entered, we all know these 3 accounting policies. Important point: if fundamental assumptions are followed, then disclosure is not required. If assumptions are not followed, then disclosure is required. Important. Last point: how to select an accounting policy. Primary consideration: whenever any accounting policy is to be selected, then policy which reflect true and fair fact or view of the entity should be selected. This is the primary consideration. Now we'll see secondary consideration. We have 3 sub points in the secondary consideration area. So let's see. Secondary consideration. Secondary consideration: prudence. Prudence means recording income on certain basis and expenses on uncertain basis. Pretty much simple, and it involves auditor's attention. Substance of a firm. It means importance is given to actual fact than the legal form of transaction. Last point but not the least, materiality means policies should be drafted for material items only. Materiality means where decision of shareholder to hold or dispose of the share may be affected. That's all. It concludes our accounting standard number 1, disclosure of accounting policy. Let's quickly revise it in less than 1 minute. Mandatory, no exemption. Accounting policy means principles, methods followed in preparation and presentation of financial statement. Irrelevant. Significant accounting policies disclosed at one place. Material effect on financial statement regarding income and expense considered significant. Whenever any change in policy, old, new, effect of change, reason of change. Not relevant. When can we change? Better presentation, compliance with AS, compliance with law. 3 basic assumptions: going concern, consistency, accrual. Fundamental assumptions: if followed, not disclosure required; if not followed, disclosure required. Last policy. Primary consideration: which reflects true and fair view of the entity, that policy should be considered. Secondary: prudence, substance over form, and materiality. Prudence: all income on certain basis. Substance over form: importance given to actual facts. Last point: materiality, means should be drafted for material items only. Decision to shareholder can be material if shareholders are affected, because materiality means where decision of shareholder to hold or dispose share may be affected. That's it. Thank you.